Hey, what's going on? Today we are going to be doing a bit more in regards to budgeting and account reconstruction. So we're doing exercise 17.6. So what I'm going to do is this video or part is going to be A through to D and the intro, and then the next part will be, I think, the remainder. So we're going to go have a look at the textbook and we're going to go, okay, this is what we need to do. So you need to be on textbook page 477. There we go, 477. So you need to be on page 477 and you're looking at Digital Masters, the account balances they've provided us, the debits and the credits. Now, you notice they don't add up. That's okay. I think that hasn't accounted for everything just by eye. It looks like it hasn't. So we've got that there. All right. Poppy Marcel is a proprietor of Digital Masters. Following information. In the anticipated transaction, some things to note. A credit balance of banks 38,000, so that means they owe money. They've got the bad doubtful debts allowance, so that should be over there to make that balance. We've got accrued wages which will need to be paid, and then you've got accumulated depreciation, so there will be a depreciation calc. So we've got those all there. So the anticipated transactions for the 30th of June, you've got what the cash sales are, 42,000 plus GST, credit sales 180,000 plus GST, and the accounts receivable at the end is expected to be 19,000. All inventory is purchased on credit and sold at a 50% markup. So any sale you just half and you get the cost of goods sold. So we'll show that too. And all inventory is purchased on credit. Fun. All right. Other estimates for the year include the amount of inventory we actually purchased, some sales returns, discount expenses, wages expenses, depreciation of shop fittings, cash drawings, inventory loss, and doubtful debt considerations. So Poppy is currently renting a photocopier at $550, including GST, so $550 GST per month, payable 12 months in advance. Poppy has received notification that the rent will increase to $660, including GST per month, commencing on 1st of September. So June, so July and August. So they've got 10 months of that expense, 2 months of the previous expense, because this is June, then July, August, that's the end of the 500s, and then September 600, okay? On the 1st of April, the business will invest $6,000 in a 3-year term deposit. Interest is earned at 8% per annum, payable on the 31st of March each year. So we invested on the 1st of April, and then we get paid interest the year after. So that'll be accrued revenue. Earned, but not yet received. Estimated balances are inventory, bank overdraft. Oh wow, that's the bank overdraft, and your GST clearing. So we're going to be doing A through to D. So we're calculating the budgeted photocopy rent expense, interest revenue, and the bad debt expense. So we're going to be calculating those three. So what we'll do is we will duck over to this side and we will put in all this information. I'm just going to move this across here. All right. So we want to do the budgeted photocopy rent expense. So we want to make one note here. One step, 600 per month. And then, so I'm making some notes now, 1 July through to 31st Aug, 500 per month. I've already taken the GST out. To take the GST out, quite simply, you divide the number it's worth. So in this case, July to August was 550. Divide it by 1.1, you get your pre-GST amount. Same, likewise with September, where 660 divided by 1.1. So that's where that goes. So there are 2 months total, July, August. Likewise, on the September one, you've got all September, October, November, December, January, February, March, April, May, June, 10. And because it's year, you know it's got to add up to 12. So then the sum becomes 600 multiplied by 10. Got to put that in brackets because that's 1/2 of the equation. Plus 500 multiplied by 2. That becomes 6,000 plus 1,000. Now, if you were to write this in a stack, I think you only need to provide these 2 lines. I'm just showing you how I work this out. This is my logic behind the answer. 7,000. Please make sure you put your answer in the box. Please remember that. Makes my job a lot easier when I have to mark your sacks. Alright, let's have a look at the next one. Budgeted interest revenue. So, if we go to the second last dot point, on April 1st, business will invest $6,003 term deposit. Interest is earned at 8% per annum. So, we need some info. So, we need to, how many months from April through to the end? So, it's April, May, June, 3 months. We'll have term deposit for 3 months. April through to June. Okay, and then they earn, that's going to be their accrued. Next, so we need to calculate. First thing we need to or the whole thing is 6,000 or investments multiplied by interest percent multiplied by months over 12. So we put our numbers in, we go 6,000 multiplied by 0.08 multiplied by 3 over 12, or 0.25. Okay? So we then just plug our numbers in, 6,000, it's about 480, I think. 480. And then you multiply by 3 over 12, so divide by 12, multiplied by 3 gives you 120. Oh, let's just tidy that up. 120. So our budgeted revenue is 120. I think to get the marks, a combination of these 4 lines, probably honestly, as long as you put these 2 lines, the ones in bold, I think that would get you a mark because that shows you know the formula, you recognize the months, and that's what all that info is. I'm just, again, putting the verbal spin on that just so you know, hey, this is what Mr. Donnelly's thinking. Alright, bad debt expense. So there's a few little bits we need to look at here, or some considerations. So we're going to calculate bad debt needs to be. Where does our bad debt need to be? It is 1%. Bad debt needs to be 1% of sales, and that should be doubtful debt. Because remember, any increase in the doubtful debt is where we add that. So doubtful debt needs to be 1% of sales. So 0.01 multiplied by, and it's credit sales. I believe it was credit sales. I'll just double check. Was there somewhere? Net credit sales. So we need to do sales returns as well. So quick sums here. Sales returns is 5% of credit sales, so 0.05 multiplied by 180. get that info from dot point 2, needs to be 9%, 9,000. So we go 180,000 minus 9,000. It becomes 0.01 multiplied by 17100. And that'll give us 171,000 multiplied by 0.01, 1710. Okay? So that's part one. We need to know that our doubtful debt, stuck in the uni head, the allowance for doubtful debts, needs to total 1710. Currently, let's do that again. Currently, doubtful debts is 800. All we need to do is 1710 minus 800 to get the difference. Difference is bad debt expense. Hence, 1710 is where we need to get to, minus where we're at, and that'll give us our new number. So let's just clear that there so I can actually write it in. And we see the bad debt expense is 910. 910. So those are our three numbers. And then it's just we go and build from here. So we just need to be plugging our numbers in. So we'll do that now. So let's start with sales. Let's go cash sales. Cash sales, credit sales, less sales returns. So our cash sales, dot point 1 was 42,000 plus GST. Credit sales was 180,000 less our sales returns, which was 9,000. And we build from there, and so we plug in our numbers and we go 42,000 plus 180,000 minus 9,000 will give us 213. I'm just going to move that down a line. So that'll give us 213,000. And I'm going to put this as 222,000, just so I know that's about. I'm going to bold that just so that's just for my own numbers. Now notice anything that's subtotaled automatically goes here. So we've got cost of sales. Cost of sales really easy to calculate. If you have a look, you go down. We'll go. Where was it? There was a cost of sales here. Yep, all in dot point 2. All inventory is purchased on credit and sold at a 50% markup. So what I'm just going to do a little trick. I'm going to put the formula in here this time. So the formula for the cost of sales is always SP equals CP minus 1 plus percentage. So this time all we need to do is put in our numbers. So we know the selling price is 213,000 equals cost price, which we don't have, multiplied by 100% markup means percentage is 100 or 1 in whole terms. So CP equals 213,000 over 2. So I can just divide it by 2 and I get my cost price of 106,000. Oh. I'm just going to 106, 500, and I'm just going to tidy that through. There we go. That now lines up. So yeah, that's how that number was reached. So I'll just I wonder why that didn't go through. Yep, did go through that time. Hooray. So that's where that belongs. And then we just get our gross profit. Now gross profit will be half of that, so 106,500. Simple. Next we have we have any adjustments for inventory loss. Inventory loss is 1% of sales. So we go less inventory loss, and it's just 0.01 multiplied by 222,000. That's the other reason I put this number here, just so it makes my life a touch easier. And then we've got adjusted gross profit, 106,500 minus 2200, 104,300. And then we've got our other revenue, and we only have the other revenue, and that was the interest expense. So we just go interest expense. Now interest expense, interest revenue. Why did I write interest expense? It should be interest revenue. Interest revenue is going in the other revenue section because the only revenues we include up here are those directly related to selling. So please remember that. It's only directly related to selling. And the answer is 104,420. Giggle. I'm so mature. Alright, and then we're just putting in all the other expenses. So we're going to put the photocopy rent expense and the budgeted bad debts expense first, so we don't have to look at A and C. So bad debt expense, and that totals 910. There's going to be a few comments on this as well. 7,000. Photocopier rent expense. Photocopier rent expense, and that will come out to 7,000. There we go. So we then move on, and there we go. Just bugged out for a second. Love to see it. We then just work our way down and go, okay, is there anything we need to include? So dot point 1 is related to sales, not an expense. Dot point 2, we've already included as cost of sales. Dot point 3, we need to work out. So we've done purchase of inventory is not relevant. Sales returns, we've done discount expense. So that's the first one, discount expense, and it's 2% of credit sales. So 2% of 180,000. And that's going to be 3,600. Now, it doesn't say net credit sales, so we have to use these sales. So please remember that. And that was 3,600. Is it 2%? Yeah, no, it would be, because 1% would be 1,800. Yep, checks out. Then we go wages expense, and they just give us a flat number. Nice of them to do that. So the wages expense will be 29,000. The depreciation of shop fittings, that'll be 5,300. And then we've talked about the photocopy rent. We've talked about that, and we've covered all that. So that should be our expenses. So we just need to now subtotal it. So that's where we're going to be doing next. I'm just trying to get something to work. So we should have our numbers there. So let's do a bit of math. 910 plus 7,000 plus 3,600 plus 29,000 plus 5,300 gives us a subtotal of 45,810. And we bold it. And then it's just subtract here from here. So 104,420 minus 45810.0. I hit 0.3, didn't I? Damn it. That's, yep. Guys, gotta be super careful on the calculator here, because if you hit the wrong number, you can see that it'll blow out. But I know it's going to be a profit, so wasn't overly concerned. So 58610, 58610. So your number for Part D should be 58610. So there wasn't much in the way of formulas here. I'm just going to add the formula for discount expense. So they said it was 2% of credit sales. They didn't say net credit sales, they just said credit sales. So I'll put that at the bottom as well, and then it becomes 0.02 multiplied by 100 and, oh, why did I put a dollar sign? Should be there. And that'll give us that amount. Do not include cash sales or sales returns. Okay? It's only the credit sales. If they said net credit sales like they did for, I believe it was bad debt expense, I believe, or it might be an inventory returns. I forget where it was. I'll just bring it up. Like they go net credit sales for doubtful debts, sorry. So then it's 171 as we worked out above. So that's where that fits in, okay? Just a reminder there. So on that note, please make sure you like, you subscribe, and you go through and you go, okay, cool, this is what makes sense. And I will see you for part 2. See ya.